the
They
garlic
have
chicken, but
this-
it's really, really good.
Like steak poke on their Yelp that looks really good. 'Cause
Yeah.
I don't like regular poke, so but I love steak.
Yeah, this is a.
Bruh.
That's fucking.
Joey,
Yes.
if I'm a first-time home buyer
Okay.
or just any home buyer and I want to start shopping for a home,
Yep.
what is my process of getting pre-approved? The reason why we want to educate our clients and let them know that it's okay to start small and work their way up to their goals is because we don't want them to be priced out of the market. Growing up, I never used to like hamburgers.
Really?
It wasn't until like last year, maybe or like 2 years ago,
Yeah.
that I started eating hamburgers.
What?
Yeah,
How come? Are you like a picky eater?
I was. You know? Hi, I'm Amber Gonzalez, your fave Oahu realtor with Keller Williams Honolulu. This is Joey Chun, my favorite lender. I want to start a series where I interview people that I love to work with on island within the industry so that we can talk about real estate and how their job pertains to what I do. But a second thing I want to do is, if you know me, you know I love food, I love to eat. And I wanted to highlight a local eatery on island. So Joey picked today's eatery and it was Hamada General Store. Fun fact, they were actually started off as a local grocery store.
Grocery store. And if you remember the bar, home bar, that kitchen is now Hamada General's kitchen. So the same one in the same. What did we get today, Amber?
I got the wafu
Hamburger steak, I think.
Okay, I haven't even looked at it yet, but I'm super excited because their Yelp looks so fire.
Wow, that looks good.
This actually looks like so good. You can share.
They have daily specials as well. So I got the garlic chicken.
Is that poke?
There's poke in here too. You want to try some?
No.
You should definitely try some.
I will
before
actually,
start.
but I actually don't like raw fish. I know like
Oh,
I'm
sorry.
half Japanese, but like I'm only half, so.
I'll eat this part then.
Yeah, but I actually would try some because like I've been trying to eat fish, and I've moved on to like cooked fish. So I like cooked mahi, cooked salmon. I eat ahi belly, and I'll eat like small pieces of sashimi, like baby feed me.
Do you have like a fish phobia or something?
I don't really know. Like, I don't know what's wrong with me. I think it's just because like I'm only half Japanese, but like I'm also half Mexican, so
Makes sense.
yeah.
All right, dig
right.
in. You should definitely try that.
Why do I have a fork?
I don't know. There's only one chopstick. That's
Okay.
Sorry. And I have the fish and stuff.
All right, first bite. All right, Joey. So tell me about yourself and your role in the whole real estate home buying process.
Okay, so I'm a lender. Been doing this for about a decade now. Born and raised here, so local boy. Graduated from Kamehameha schools. Graduated from
Kamehameha.
University
we
of
love a
Hawaii.
private school boy.
University of Hawaii. I'm Manoa. Graduated there.
Me
So
too.
yeah, been
What
doing
did you
this.
major in?
Business,
Oh, me too.
Yeah,
what?
so-
What specifically?
entrepreneurship and management.
I was marketing girly.
So Schuyler, shout out Schuyler. College of Business. Learned a lot of really good things from going to school at UH. Yeah, so my job in the real estate process for helping buyers, navigate through Hawaii's real estate market is just being there as a support system, by the same time helping them to understand their finances and their goals. Because when you buy a place, condo, townhome, single family home, it is something to live in, but it's also going to be like your biggest investment. You know what I mean? So
Yeah.
you want to make sure that works for you in the long run.
100%.
Yeah, so we help buyers get pre-approved, let them know that, okay, this is what you can kind of afford, this is what your max is. But the big questions I like to ask my clients is, what is comfortable for you? Because you could be approved for $1 million home, but you might want to only pay a mortgage payment of a home that's like, I don't know, like $500,000 maybe. Everybody needs to live within their means, especially living in a place such as Hawaii where things get expensive.
Yeah.
I'm so sorry, but I think my chicken, I gotta just bite it because I'm trying to cut it up all nice.
Okay. No, just bite it. But one thing I do love about Joey and working with Joey is that he does take into consideration like my client's lifestyle and their current lifestyle, because like he said, you could be approved for like $1 million, but you only want to like pay a $500,000 mortgage, because you don't want to have to change the way you live like drastically, and we don't want you to be house poor. So I think one thing I really love about Joey is that he makes sure that you can still continue to live the lifestyle that you want, but also build your generational wealth or like investment and things like that.
For
So,
sure. And something like buying a home, especially in Hawaii, your quality of life should not change.
Yeah.
If anything, it should get better. When you're renting, you're pretty much taking, let's just say, $3,000 every month and flushing it down the toilet. When you own your own property,
expensive shit.
that's an expensive poop.
Sorry.
So when you get to reinvest in yourself every month, you know, it just helps you build that long-term wealth, that longevity.
Yeah.
You know, for generations to come after you.
100%.
This food is really good.
It's so good.
This is
Do you
really,
want to
really
try
good.
some of mine?
No, it's okay.
Okay.
You want to try some of mine?
No.
You're gonna have to bite it. That's why.
No, but like,
Oh, here.
let me try a poke.
Yeah. Go ahead. Oh, I shouldn't be sticking the chopsticks in like that.
Whatever this is, I think it's daikon.
That's definitely
So
daikon.
good.
Here, let me cut you a piece of chicken so you can try some of mine.
No, I just.
You should definitely try the chicken.
Okay.
This
oh,
is
look, you have a knife.
yeah. I just picked. This was your knife.
Oh. Where's still my chopsticks? So.
Sorry. So this, you know, Hamada's great because they have different specials like every day, I think.
Yeah.
So I've never seen this on the menu yet, the
They
garlic
have
chicken, but
this-
it's really, really good.
Like steak poke on their Yelp that looks really good. So now that we know who Joey is, tell me about your most rewarding transaction that you've had in your decade of being a lender.
Ooh, most rewarding. I honestly feel that every transaction, helping someone achieve their goal and dream, is the most rewarding. Just because I'm born and raised here, and I know how hard it is to always have a place in Hawaii because a lot of people get priced out. You know, Hawaii is so expensive, so you see a lot of people moving to like the mainland or whatever. So the main reason I got into what I do is because, you know, I kind of noticed that, and I wanted to help my friends and family always have a place to call home where they're from.
Yeah.
You know, like not everybody has the luxury of being able to live where they're from forever. You know, so every transaction is very, very rewarding to me. But yeah, just helping people you come across, clients that turns to friends and family, like it's just nice to see them at the signing table and everybody's just super stoked to be there signing for their home essentially that no one can take away from them. Yeah.
I completely agree with you. Like, I think the most rewarding part of my job or our job is that we create these lifelong friends and these clients that turns into friends and family. And, you know, I have a few of those, and it's like we still go out to eat whenever if they don't live here, you know, they're on island, they call me, and like, it's like to know that they liked me so much that they still want to keep in contact and like invite me to their house and stuff like that. I think that's like my favorite part.
Yeah, you have an impact.
My job. Yeah.
For sure. I think that's, how can you not feel like that's just awesome, you know?
Yeah, definitely. On the flip side,
Yeah.
what was your hardest transaction?
I think one of my most difficult transactions is when we get inquired by people where maybe their deal is falling through for whatever reason. You know, lenders, we all work differently. But sometimes, like, especially with this past year, with all of the things happening with insurance and condos becoming insurable or having not enough coverage, some lenders, they might overlook that.
Yeah.
Get into escrow, things fall out. I had a client where they were purchasing a condo, and they're all the way at the very finish line, and then whoever they were working with before, they ended up not being able to do the loan because of the insurance being underinsured. So I had to save it. But then when we get the file, it's like we have to start all over again. And that whole thing with the insurance coverage of the buildings, it's not something that is, you know, has been around forever. It just happened. So there was a lot of speed bumps into our process. So I had to take that loan, find a product that fit the client's needs as well as the building's needs, and then we were able to close that one. But because there's a timeline, I'm just picking this up from day one. But you have to realize that these clients and the realtors, they're on like day 30. So they're, I have to like essentially rush to get to where they're at.
Yeah.
So those can be a little bit stressful and difficult, but
Yeah.
it's
So
very
you saved the day.
very rewarding again.
Yeah,
but
rewarding,
it's
but
stressful.
hard,
It's
yeah.
very stressful, but we can get it done, so it's
Yeah,
good.
100%. So speaking of insurance and condo insurance and fire insurance, there are a lot of things that are like, holding up condos specifically that because you can't get lending on them. There's a thing called a portfolio loan, and I have a client that's interested in one of these buildings, but it only can be, I guess, acquired by getting a portfolio loan.
Right.
Could you just give us like a brief or general introduction to what a portfolio loan is and why and when would you need that?
For sure. So normally, like when you do a conventional loan, a lender will do a loan, sell the loan to Fannie, Freddie, on that type of market, they buy it. That's how lenders they make money on the loan. A new servicer comes in, collects it, and they get paid the interest. A portfolio loan program is when a bank, they hold the loan in their portfolio. That's why it's called a portfolio loan. Essentially, when they do this, they're able to take on a little bit more risk with the building because they're not selling it off to anyone. They're just holding on to it. So you see that portfolio loan coming into play a lot nowadays with like the underinsured buildings because, okay, this loan that we're giving the client to purchase this home, that home is the collateral. If something were to happen to that home or the client can't pay for whatever reason, we're going to take back that property that's our collateral, essentially. So a lot of the times now when you have these buildings that are underinsured for the insurance, that causes a big red flag because that collateral is at risk. So essentially the client would have to put more money down or use a specific program like a portfolio loan. These portfolio loans, it's normal for them to have a minimum down payment requirement of like 20% because we want to make sure that the client has some skin in the game. They're not going to just put down X amount of money that they're able to walk away with and just leave us hanging with that loan that's out to them. A lot of the times you can see portfolio loan programs being used to purchase what's called condotels. So like that was really big at one point. People were doing Airbnbs, renting them out, short-term rentals. But again, that's what those kind of loan programs are for, is to take on a little bit more risk for the property. Not necessarily the client, but the type of project they're purchasing into. So you wouldn't really essentially see like a portfolio loan program being used for like a single family home. It would be majority for condos. Yeah. How's your food?
Super good. Your chicken is also really good.
Thanks. Yeah, it's good.
I'm like listening to you, but I'm like, this is so good. A building that might be popular and you might have heard a lot about is Nahele and Ho'opili. So they actually went from being like VA approved, FHA approved, just a good condo you can get a conventional loan on, to only doing portfolio loans.
Oh, I didn't know that.
Yeah, so Nahele, I think it was because they had a lot of litigation, and then I heard about like some stuff with the elevator that they were having.
Issues with the elevator.
Yeah, it was just a lot of issues that they were having, but I do know that they went from, all of these different types of loan approvals to just only being portfolio.
Oh, interesting.
Yeah.
That throws a curveball at clients. Like if they really want that home, essentially like doing a conventional loan, you can go as little as 3% down, which majority of people might have. But if you go portfolio and they have certain down payment restrictions or requirements, that makes that pool of buyers a lot smaller because not everybody has $100,000 to use on like a home, especially their first home purchase.
Yeah.
So it makes it a little bit tougher in that sense.
So speaking of portfolio loans, there's a lot of variables that can change, and it's really good to have us on your side to kind of help guide you through that. But what are some common mistakes that first-time home buyers or just buyers in general, you see them making, and like how can they avoid those?
Especially in Hawaii where things are expensive. Like you go to the grocery store, you spend $100 just on essentials. So you can see that the cost of living here is very high. I think one mistake that a lot of first-time home buyers make is they try to not live within their means in a sense. And then when they're trying to buy something, they might overexert themselves. And that's why we ask, what is comfortable to you? What are you going to do that's going to benefit yourself by purchasing this home?
Yeah.
So a lot of the times we want to make sure that whatever money those clients are putting down and what they're paying monthly, it makes sense to them. So one of the best questions I always ask my first-time home buyers is, how long do you think you're going to live in this home?
3 to 5 years.
3 to 5 years maybe, depending on their situation. Imagine if it's a young couple, they get married, have kids. That one bedroom essentially looks like a studio now. They're gonna need to upgrade eventually. So imagine if they went above and beyond their means. That down payment they used up front to purchase something might work against them in the future when they have to upgrade or, you know what I mean? I'm not saying that they're gonna buy like a 2 bedroom and that money's going to waste, but imagine if they bought an expensive 1 bedroom. You know what I mean? Just because they're like, oh, I love this, and this about the home. But when it comes time for them to upgrade, they essentially might not be able to. And then you have all of these extra problems with like being underinsured for the buildings, all these things that can come up that we might have not foreseen 2, 3, 4 years ago. So I think the number one thing that first-time homebuyers, especially in Hawaii, have to do is really look within their means and ask themselves, what is comfortable to me, and how long am I going to be in this home?
Yeah.
What makes the most sense?
I think speaking on that, like I've had many clients, first-time home buyers who, of course, everybody wants that single-family home with a nice yard. They want everything. Like they want their dream home, your first home.
Right.
Because I feel like, they feel like they've saved up for so long, or they've just been waiting for this moment for so long that they want the house that they want to live in forever.
Yep.
But I think as a first-time home buyer, especially here in Hawaii, you have to be okay with starting small. And I think just having your mindset there will help you so much in the future. Because if you can start small and you're comfortable with, starting in a studio or 1 bedroom or a 2 bedroom, we can, in 3 to 5 years, because our appreciation is so great here, you can sell that and then use that as a down payment to either a bigger townhome or like your single family home. So it's all about, starting small and then working your way towards where you want to go.
Yeah, definitely don't overexert yourself
Yeah.
or by any means try to live outside your means, or nobody wants to pay a $10,000 mortgage every month. That's crazy.
That is crazy. And those mortgages exist today.
Yep.
The reason why we want to educate our clients and, let them know that it's okay to start small and work their way up to their goals is because we don't want them to be priced out of the market.
Yeah.
Oahu's market is really special, definitely compared to the mainland. So let's talk about the market in the past few years. Before COVID, what were interest rates?
Before COVID, interest rates were like, maybe like 4 to 5%. COVID happened, world changed, right? Rates dropped all the way down from like, I don't know, to 2 to 3%. But the difference that you see in those things is because the rates come down so much, that influx of buyers increases a lot. So especially in Hawaii, the price of an already expensive place goes up even more because people are outbidding each other because there's so many people that can qualify for that home now.
Yeah.
So, like you'll never ever see rates drop and prices drop. They're always opposite if you kind of take a look at that. What are some things that you noticed that are, challenging for buyers today in today's market?
Definitely the rates. I think that's the biggest thing. That's what has everybody's attention.
Yeah.
Like you said, Black Friday, COVID times will never happen again. I mean, I don't know if it will, but not in the near future.
I don't think so.
And so, I really miss those days because, like everybody was overpaying, but everybody had great rates. And so that's why, nobody wants to sell right now if they don't have to. But everybody wants the rates that they saw during COVID. And so everybody is stuck on, I want that 2%, I want that 3%. But it's like, we are probably not going to see that. We're at 7s and 6s right now. We'll be lucky to see 4 or 5%, So I think the important thing is to educate the buyers that can afford to buy in this market and tell them like, hey, buying now, if you can afford to do so, is the best thing you can do. Because one, you're going to miss out of competition. Like you're not competing with anybody, right? During COVID, everybody was competing with everybody. You had to bid $50,000, $100,000, crazy over asking prices, come in with like crazy amounts of cash because of the appraisal. But now we get to, as a buyer, ask the sellers for seller credit, help them, have them help you buy down your rate, or even like lower purchase price, right? So there's a give and take in both markets. yeah, we can always make it work for you.
I think you brought up a really
Yeah.
good point, Amber, and like, buyers that can get approved and buy something now. I get a question asked to me a lot of the time.
When is the best time
yeah.
to buy?
And I always tell clients like, last year was a good time to buy. Next year, this year, I think it's more so if you're able to purchase now, you should take advantage of that because you never know what's going to happen next year. Can you imagine all those clients during that Black Friday sale during COVID when they're like, I'm going to just wait for rates to come down to 1%?
Yeah.
Imagine how many people missed out because they waited and then rates jump up after that. And now you cannot even get approved for that purchase price you're looking at, right?
Yeah.
Because you waited.
It's like Black Friday sales today that like it's basically the same sale you have all year.
Right, right. For sure.
Yeah.
For real, for real. So, like when you have the opportunity to purchase, I think, especially right now, if you have that opportunity, like you said, you can get credits, do like a 2-1 buy down, ease into your payments, ask a seller for concessions or whatever it might be. You're getting a discount on that purchase price and that rate that you lock into. If it drops in the next 2 to 3 years and you refinance, your monthly payment is coming down. So not only did you get a discounted price on a home, but when you refinance, then you're also getting a break on that rate that you locked in for 30 years, right?
Yeah.
So it's kind of a win-win for a buyer in that sense that's able to purchase in today's market with not a lot of competition. Because I'm sure you see places sitting on the market a little bit longer, right?
Oh yeah, for sure.
Yeah.
I think a lot of people, see home sitting over a month, 2 months, 3 months. But as a buyer, that's kind of good for us because, we can ask for certain things and it makes it easier for us to negotiate with the seller. Whereas like we were competing with other people. So you would have to pay for things the seller paid for during COVID. Like you would have to come in with X amount of cash. It's like, yes, you were getting a great interest rate, but you were giving so much.
True.
Yeah.
So like, for you, Amber, because you're great at what you do, what are some things that you've been noticing in today's real estate market and things that might be kind of coming up for like a buyer or a seller?
I think for sellers, definitely being okay and comfortable with your home sitting on the market for a little bit. I think working with your agent is really important. Listen to the advice that they give you. If they say, I think staging, photography, videography takes a listening a long way.
Simple things, yeah.
Yeah, I've seen certain listings online, and my clients have brought this up too, where like we see an agent take a photo with their iPhone, or like
That
you
is
see them
hilarious.
in the background. I'm just like, what?
When I'm just gonna pull out my phone, but you see one of these come up.
Yeah, in the bathroom, you're like,
That is so funny.
selfie. But no, like it really, because that's your first impression to the buyer,
True.
right?
Yeah.
You're making a first impression, and if somebody sees your home and it's just like not the best quality,
Right.
they're not even gonna want to go to the open house. They're not even
Right.
gonna want to see it. Where maybe there's a similar home on the same street at the same price,
Yeah.
but it has staging, professional photography. Like, wouldn't you want to go and see that one rather than
The effort is there.
Yeah.
Yeah.
So if your agents, are trying to work with you, I offer free photography, staging, all of that. Anyways, but listen to their advice, and I think it's a market that sellers really need to trust their agents.
Okay.
And lean into what they're saying. On the flip side, for buyers,
Yeah.
same thing. Trust your agent. You hired them, and you're working with them for a reason. Like I said, if you can't qualify for a lot now because of interest rates, we work together to try to get a rate buy down, seller credit to help with your closing costs or your rate buy down. I think it's just, just working with us and like trusting us and like having us run numbers and seeing what we can do to help get you into a home that can work for your situation now, and then working with you to get to where you want to be.
Yeah, that's great. And
Yeah.
Amber, I really like that you said that trust in you and your team. It's so crazy, especially in Hawaii when, you talk to friends and family, all of a sudden everyone becomes an expert, right? And like, I've heard so many stories with like first-time home buyers, even second-time home buyers, third-time home buyers. They get all of this influence all of a sudden when people find out, oh, you're trying to buy a house, like they try to give you all this advice. And I always tell people that, you know, when your mom and dad, grandma, grandpa, auntie, uncle, cousins, nephews, whatever's, when they bought their home, might have been a different situation and time than when you're doing it, right? Imagine if you bought during COVID and you're trying to give advice to somebody buying right now. That's
Oh, yeah.
two totally different
Two
worlds.
totally different markets.
So I think the trust is huge because you and
Yeah.
I, we live it daily. You know, we go through it daily. We see things daily. Rates change daily.
Yeah.
Market changes daily. There's always new guidelines, things that might come up, especially with like the insurance on the condos. You know,
Yeah.
that wasn't around during COVID times where things are underinsured and people are having a hard time getting insurance now.
Yeah.
Which is just, I don't know. Times change. So I think trust
Yeah.
is huge. I think that is excellent. And if you're a buyer or seller and you don't trust the team you're working with, like why are you even working with them?
Yeah.
You know, it doesn't make sense.
I always tell my clients like to be able to be comfortable and fully trust people you're working with, especially lenders, because they're the ones looking at your finances. They're the ones who's like getting into your personal life. You know, I'm there if you let me in, but like he's in that. So
I'm in there looking. I probably know people better than they know themselves.
yeah, exactly. So find a team that you really trust working with, that you're comfortable sharing certain things with, which could be us. We should do it. We have to lean in together. Okay, ready? Which could be us. Okay. But speaking of like guidelines changing and things like that, I want to kind of jump into like military buyers.
Okay,
because,
cool. Thank you,
when,
men and women
yes,
that serve.
thank you for your service. When rates kind of went up, you know, we started to hear about this 2-1 buy down and these buy down programs. And so VA, they kind of came out with something different, which is the VA assumable loans, which is a huge thing for VA buyers, especially here in Hawaii. So kind of let's talk about VA
Assumables?
Yeah.
So VA assumables, essentially, the buyer would have to work with whoever the loan is with at the time, so whoever's servicing the loan. It's always good for a VA to go VA because they can use their own eligibility. But if you're just like a regular civilian, it might be difficult because the veteran is ultimately sacrificing their eligibility for you, which kind of defeats the purpose. I know it's a long process too for the assumability, but it's pretty much essentially, you know, you as a, let's just say a veteran to a veteran taking over their loan. They're absorbing that interest rate that might be lower than what you can get today. VA home buyers though, compared to like conventional buyers, portfolio loan program buyers, the rate is a little bit lower. Like I would say they have a lot of, you know, because they serve and that's such a great duty and service to our country, they get a discount on the rate, essentially. That's like their eligibility, part of what they receive as VA buyers, along with like the 0% down. So VA buyers, they have great perks. The assumability is good too, but it's a little bit more difficult because it's the buyer and the seller, the two veterans. So depending on the buyer situation, ultimately the sellers could change their mind too, just because I've seen it happen before where a civilian buyer would try to assume a veteran's you know, loan, but then they have to give their eligibility, they have to move, they can't even use their 0% down, you know, eligibility to purchase a home, and that kind of pushes them out of doing it. So they're like, maybe I shouldn't let my loan be assumable. So I think it's a time and place. It takes the right situation to do that for sure. But yeah, that's kind of what that is. It's just pretty much taking over the rate that's already existing, because of course I would want a 2-3% rate rather than a 6-7% rate, especially in today's market. You know,
VA assumables are great for VA to VA. That's typically where you see them done, because the seller, they have this great 2.25 interest rate, but their entitlement is tied up in that loan. So let's say we have a buyer who is also VA, and they want to buy this house, and they want to assume the seller's rate at 2.25.
Yeah.
The seller bought the home at $800,000, but they're selling at $1 million.
Okay.
So as a buyer, as a veteran buyer, you can assume their loan at 2.25, but the catch is you need $200,000 cash. So you need whatever difference is between the loan balance and the purchase price.
I didn't know that.
Yeah. And so that's kind of what an assumable is. But yes, you get that 2.25 rate, but you need to have the cash to make up the difference.
Wow.
So that's just like a brief what a VA assumable is. It's great if you have the cash, great for VA buyers. But yeah, as it's normally VA to VA because the seller would want their entitlement freed up so they can purchase wherever they're moving to, right?
Got it.
With the 0% down.
Right.
Yeah.
And I feel like I love working with VA buyers, not only because we can give them a service in return of what they do for us, but I think the VA loan program is probably like the best home loan program.
The best.
0% down. I mean, if you're not, what is the word? There is a funding fee, so it's not necessarily a free loan. You still have closing costs and fees, and if your veteran is not exempt from paying the funding fee, you have a funding fee that's financed into the loan, so you don't even have to put that money down too, which is great. So you only have to worry about closing costs. But besides having a lower rate than what the conventional loans would be, you have a lot more flexibility as a VA home buyer. Your debt to income ratios are very important when going qualified, because the lender is saying, okay, can you take on this debt, right? Essentially. So for VA buyers, that debt to income ratio is a little bit more stretched in a sense where you can go higher than what a conventional buyer could be, right? So I've seen VA home buyers beat out conventional buyers. Like even though maybe a conventional buyer is getting or offering a deal to a seller where they're putting a big down, the VA buyer might be able to beat them out by offering a higher on the price because they can take on extra debt. The only thing that causes, this happened a lot during COVID too, with the appraisals, is that the appraisals were coming under because it's getting so influx on the purchase, right? Everybody's overbidding. So the appraisal is an important part of not just the VA buying process, but essentially the lending process. So little sidetrack, but the lender, we can only lend upon the lower of the sales price or the appraised value. So meaning, let's just say
Whatever is lower.
whatever's
Literally,
lower.
I was about to go off topic to this.
Yeah, I don't know. I just thought about it. It's good.
Yeah.
It's good. We're talking naturally now.
Appraisals. This is very important. Okay, let's restart. Appraisal.
Yep.
Ordered by your lender.
Yes.
Like he said, the lender will only lend to the purchase price or the appraised value, whichever is lower.
Yep.
Yeah.
Whatever's lower. So to kind of give an example, let's just say you're buying $1 million property. You're buying it. That's the purchase contract, $1 million. You go through everything. You're conditionally approved, all that. Let's just say you get the appraisal. It comes in at $980,000. Now we have a little bit problem. Because it comes in 20 grand less, the lender is only able to lend on $980,000. We're not going to be able to lend you money on the higher. So what happens is the sellers and buyers now have to discuss, okay, how are we going to make up that $20,000 difference? If you have a really nice seller, they might just be like, okay, we'll just come down on the purchase price.
3 things can happen. So that the seller will come down to the appraised value. 2, we come up to the purchase price value. Or 3, we meet in the middle. But anything that is over the appraised value is cash coming out of your pocket as a buyer.
So that's why essentially you'll need a good realtor that is going to put an offer for you that's not only strong, but in a sense airtight, knowing that there's not going to be a lot of problems. Because the last thing you want is for it to have 2 people that are kind of stuck on what they want. Seller's not budging, buyer's not budging. What ultimately happens is the transaction gets canceled.
Yeah.
Nobody wants that to happen, right? So,
especially if you love the house, you know?
Yeah.
And especially if the seller needs to sell as soon as possible. So, yeah, appraisal is super, super, super important.
Very important, very important.
When getting a loan. Joey?
Yes.
If I'm a first-time home buyer
Okay.
or just any home buyer and want to start shopping for a home,
Yep.
what is my process of getting pre-approved?
Great question. So, we'll jump on a phone call, or if you prefer to meet in person, we can do that as well. It would be like a quick meeting, 10, 15, 20 minutes at the most. But essentially, we would just sit down and talk story. I would go over your goals and
Will you buy me
plans.
lunch?
Yeah, I'll buy you lunch. That's fine too. Doing pretty well right here, man.
I'm working through this, okay? Like, I don't even have this much of my patty left.
So, we'll meet in person or talk on the phone, and I'll go over your goals and what you're thinking of doing. I always ask my clients, like, okay, what do you do for work? How long have you been doing that? What is your current living situation? Are you renting somewhere? How much is your rent? Living with family, that's great too. You can save money. What is a comfortable monthly payment you're willing to do? How much of a down are you looking at putting? What kind of debts do you have? Anything that is kind of like alarming or something that needs to be addressed before you purchase, because nobody wants to go into a home mortgage payment and they have all these debts, and then that's just very stressful, So we want to address those things up front as well. If you're going to have someone on the loan with you, is a gift from family possible? A lot of people in Hawaii, because it's so expensive, a lot of their families are willing to gift them money to help them purchase their homes, and that's great. I think that's awesome, Yeah, just a real easy first conversation, just getting to know each other. Then I'll have my clients fill out a loan application, upload documents that I requested from them, and then my team and I will take it from there. So
What kind of documents would I need?
So let's just say you're a W-2 employee, right? Salary worker, we get your pay stubs, last 2 years of W-2s, last 2 years of tax returns. You're federal, we don't need your state. 2 months of bank statements, your ID, driver's license, just easy things like that.
What if I don't have a driver's license?
Yeah, state ID is okay.
Okay.
Unless you don't have an ID at all, which is weird. Like, who are you?
I don't know.
I don't know. But yeah, we would need some form of identification to make sure that you're you. You know what I mean? There could be more than one.
You are you, and I am no.
That's from Rush Hour 3.
Yeah.
Who are you? You are me.
Yeah.
But anyway, so we'll take the loan application, take the documents, we'll process it. Then I'll go back to my client and say, hey, congratulations, this is how much you're approved for. This is kind of what I'm quoting you right now. And then I would give them back to Amber, and you guys have fun home shopping. A great thing about our company, Fairway Independent Mortgage, is that we have this tool called like a request scenario. So I can pretty much take that file up front, run it through an underwriter, get the approval, and kind of foresee what we will need during the transaction. And that's why we're able to close loans fast. And not only close it fast, but give the realtors and the clients confidence that we'll close if we're going to get an escrow. But yeah, so hand them off to Amber. Then if they find something they like, we can put offers in on it, run some numbers to see what they're going to be, spending essentially, and we go from there. And that's how the pre-approval process goes from beginning to end. How's that?
Growing up, I never used to like hamburgers.
Really?
It wasn't until like last year, maybe or like 2 years ago,
Yeah.
that I started eating hamburgers.
What?
Yeah,
How come? Are you like a picky eater?
I was, but now I eat onions, now I eat tomatoes, now I eat hamburgers,
That's good.
occasional pieces of fish.
You don't like the fishy taste? I know what you mean.
The fishy taste, yeah.
Yeah, that's
And I
killer.
can do like chunks of ahi or like poke, but I can do like minced or like small
I see.
pieces of sashimi. Like I can't put a whole piece of sashimi in my mouth.
It's overpowering. I get it. Just like, like with certain meats, it's kind of gamey. I don't like that either. Like, like I like lamb and stuff, but when it's gamey, it's like too much. I'm like,
I never really ate lamb. I don't think I'm a lamb girl. I'm more of like a filet mignon.
Oh, okay. So funny. This is a good first episode. For sure.
It is. Okay. So speaking about getting pre-approved, and the documents you need, how does your credit score affect your pre-approval?
That's a great question. So, a lot of people, they're so concerned with their credit scores, right? And that's one thing that you hear people brag about, which is pretty funny and awesome.
I actually have a good credit score.
See, FICO. Anyway, so credit score, it's the best way I could explain it is I'll tell clients or people that ask me, the importance of it. So essentially, your income, what you make on paper, this is how much you can get qualified for or approved for. Your FICO score, your credit score, is if you're going to actually pay what you're getting lent to you back. That's how that number is determined. There's a lot of factors that go into your credit score, but of course, the higher your credit score, the better your rating for your application, maybe the better rates you can get, things like that. The underwriting system, depending on your credit score, there's different hits for certain sections of that score, right? So it goes from the low spectrum to the high spectrum, and there's different categories. So let's just say you're a home buyer, you have 800 credit score, good down. Of course, you're gonna get approved for the loan, right? If you can get approved for it, if it's within your means. As a buyer that might be identical to that person, but they have a lower credit score, you might have to put more down, or you might be a little bit more risky to the lender because, of course, they're just looking at your income that you can pay for this money they're lending you, but your FICO score is saying otherwise, right? It's like, oh, I don't know, this guy's kind of risky. His credit score is really low. He has all these hits on it. So that could be a big factor. So you know, it goes back to living within your means and not overexerting yourself, because those things matter in the future when trying to get approved for a home. Yeah, so credit score is important, very important. Yeah.
I think we talked about a lot of great topics today. I know that I feel like every time I talk to a new buyer and I just like tell them all of these things, or, you know, drop all this knowledge on them, it's like so much to comprehend.
It's a lot, yeah.
But I guess to wrap this up, let's both just give, I guess, our best piece of advice to a first-time home buyer.
Okay.
Or, you know, a buyer in today's market. You can start.
The best advice I could give to someone in today's market trying to buy their first home is, again, live within your means, save your money, don't go overexerting yourself by any means. Work hard, essentially, too. Like, you know, a lot of people, they try to make shortcuts and, you know, like, they don't work as hard for what they're trying to do, right? So you see people going from like jobs to jobs to jobs, or like doing things that are like under the table in terms of like maybe working in a restaurant, getting tips and not reporting it. You know, we can't use any of those things to approve them because it's non-existent, essentially, right? So I think a lot of the times it's kind of simple advice, but, you know, live within your means, work hard, save your money. And yeah, I know it could be a difficult thing in Hawaii, but it's definitely doable if you put your mind to it.
Yeah.
What do you think is a good piece of advice for people?
I think my best piece of advice is definitely to choose the team that you're working with wisely. Make sure you have a great realtor behind you and a great lender behind you, because we're essentially going to be the people holding your hands and guiding you through this whole process. So you want to make sure that you have people who work well together, who are knowledgeable about what they do, and someone that you can trust and feel comfortable with. You know, I always joke around that my job is like a realtor, I'm a driver, I'm a therapist, you know, we're all of these things, but it's truly because I want to do what's best for my clients and I want to give them the best service possible. Joey and I have been on phone calls with our clients like at 10 o'clock, 11 o'clock at night, you know, on FaceTime trying to work things out. So make sure that you have people that will be there for you no matter what.
Yeah.
And no matter what time of day. So yeah, I think that's my best piece of advice.
Awesome.
Thanks for spending your lunch break with us.
Yay!